If you blinked, you probably missed it. Gold prices in India have just gone through the roof, and it's left everyone asking a couple of huge questions. Why is this happening? And maybe more importantly, what on earth comes next? Okay, let's get into it and figure this whole thing out.
All right, first things first, let's just take a second to process the headline that's caught everyone completely off guard. We are, and I mean this, in truly uncharted territory for the price of gold.
That's right, 1.5 lakh rupees for just 10 grams of gold. A massive psychological and financial barrier has just been completely shattered. It's got so many of us wondering, have we missed the boat? Or is this just the beginning of something much bigger?
And this, right here, is the big question on everyone's mind, isn't it? With prices this high, is it time to sell and lock in those profits? Is it way too late to even think about buying in? Or is the smartest move just to sit tight and do absolutely nothing? Well, to answer that, we've got to understand the powerful forces driving this surge.
So our investigation really starts on the world stage, because the first big clue isn't something happening locally here in India, it's a global thing. See, investors all over the world are getting nervous, and when they get nervous, they run for cover.
So the key thing to get here is that this price spike is anything but random. It's not happening in a vacuum. It's a direct reaction to this growing feeling of instability in the global economy, and it's being fueled by political friction and the threat of new trade wars.
And what this shows you so clearly is that classic behavioral shift. When markets feel shaky, when there's fear in the air, investors start pulling their money out of things like stocks, which can be super volatile, and they pour it into assets that are seen as safe havens. And for centuries, gold has been the ultimate safe haven asset.
And look, this isn't just some vague feeling of anxiety. It's tied to very specific events. You've got renewed U.S. pressure over Greenland, which is a big deal because of its rare earth mineral deposits, stuff that powers our tech. Then you add in the signals of high tariffs on European goods, and that's sparking real fear of a full-blown trade war. And trade wars mean more expensive stuff for everyone and slower economic growth, which is exactly the kind of uncertainty that sends investors flocking to gold.
Okay, so global fear is clue number one. Got it. But that still doesn't quite explain why the price jump feels so much more extreme right here in India. So let's move on to our second clue and see how our local currency plays a massive role in all of this.
Now, this is a fundamental piece of the puzzle you have to understand. The international price for gold, it's set in US dollars. And since India is one of the biggest importers of gold in the world, we have to buy that gold using US dollars. This creates a direct, powerful link between the currency market and the price you end up paying.
Let's just walk through this for a second. Imagine the global price of gold in dollars doesn't change at all. It's perfectly stable. But if the Indian rupee weakens against the US dollar, it means you suddenly need more rupees just to buy the same number of dollars. And since you're paying for that imported gold in those more expensive dollars, the final cost in rupees automatically goes up. And this just perfectly illustrates the double whammy effect we're seeing right now. It's a perfect storm. Not only is the global dollar price of gold rising because of all that fear, but the pressure on our currency is also making it more expensive to import. These two forces are combining, and they are amplifying the price surge for all of us here in India. So we have nervous individual investors, and we have the currency effect. But you know what? There's a third, massive player in this story that we absolutely cannot ignore: the central banks themselves. Their actions are creating a really powerful foundation for these high prices.
Yeah, this isn't just about you and me buying a little bit here and there. We're talking about the big players, the central banks of major countries, who are actively buying up gold and adding it to their national reserves. This creates this huge, steady stream of demand that's way less reactive to daily news and is much more focused on a long-term strategy.
So why are they doing this? Well, this quote really gets to the heart of it. For a central bank, holding gold is all about managing risk. It's a way to diversify away from holding just one or two currencies, like the US dollar. It's a strategic move to protect their country's wealth and create financial stability. And a side effect of that is that it puts a limit on just how far gold prices can fall.
Okay, so we've unpacked the why. We've got global fear, we have currency pressure, and we have the big central banks buying. Now for the most important part. With all that in mind, what is the smart move for an investor to make right now?
First things first, for anyone who already owns gold, it's really important to just take a breath and remember its purpose. Gold isn't meant for quick, speculative profits. It's a strategic tool. Its main job is to hold its value, or even go up when your other, riskier assets like stocks are going down. It smooths out the ride. Think of it as a long-term insurance policy for your portfolio.
But what if you're thinking about buying now, at these record highs? I know, it's a daunting idea for sure.
But the approach you take is absolutely everything. Just rushing in could be a big mistake.
So, it's like you're at a crossroads, and as you can see, you've got two paths. Path one is that headline-driven buying. That's when you see the price spike, you get a serious case of FOMO, the fear of missing out, and you just drop a large lump sum of cash. It's reactive, it's emotional, and frankly, it's highly risky. Or you can take the much more disciplined path, strategic accumulation. This means buying smaller amounts, gradually over time, kind of like an SIP. This way, you average out your cost. It's a position built on a long-term plan, not a short-term panic, and it is by far the recommended approach.
So, will the price keep climbing? Well, the answer really lies in the exact same factors that caused this rally in the first place. If global tensions start to cool down and the rupee stabilizes, this explosive rally could slow down. But if all that uncertainty continues, well, the forces pushing gold even higher will still be very much in play.
And, that leaves us with a final, really fascinating question to think about. In a world that seems to be getting more fractured and more uncertain by the day, are we witnessing a quiet return to an ancient standard, a future where physical gold, and not just the currencies printed by governments, reclaims its throne as the ultimate store of value? It's definitely something to think about.